Hello, Oracles. Here is the end of the month November report for what I brought in for dividends and interest in my portfolio for this month. So I'm just going to run down the list of all the different ETFs and stocks that I had, what I brought in for income from those, any changes that I made in my portfolio over this last month to kind of look at myself going forward. And it's important to always be agile. And I'm not usually one to, buy and sell a lot of different stocks. You guys can see in my, dividend growth section that I really don't sell much anything out of there. But when it comes to some of the higher yield and the ultra yield stuff, I want to adjust because those things are a little bit more volatile and I want to make sure I'm doing the right thing for my own portfolio. Realistically, in the long run, I don't plan on really selling out of anything. I just want to keep on building up those longer plays for the long term. But in the meantime, there are some changes that I do need to make, and I made those this month, and I'll share those with you. All right, so we are going to start, and this month was a great month for some of these ultra yield plays, just because with the election, after the election happened, we saw a massive run up in a few of these plays in cryptocurrency. So saw a very good turnaround from a lot of these. And I'm fully aware that some of these could get cut in half next month. But this month here, I saw from Coney $101.16. Tesla, which actually pays out tomorrow, should be paying about $43.45. YMAX for the entire month, and this pays out weekly. So for the entire month, I brought in $42.05. AMZY, I brought in $8.21. Those were the ultra yield plays. Now, I also had, and these are the positions that I changed, I had WDTE, which I sold out of this month because while I do like it, it's very volatile. And for me, I really just wanted to cut myself down to 5 ultra yield plays. And there's still one of them that I need to thin out of, and I'll show you that in a moment. But this one here did bring in 2250, and QQQY was another one that I sold out of. I brought in 1771 for the month. And now up here, the next two that are going to be paying out are FBY and BITO. That is going to be next week. I'm going to take a look at the two of those. Whichever one I like better, I'm going to keep, and the other one I am going to be selling out of. Now, going down the line, I've got XDTE, which is a new weekly one that I just picked up as well. That one paid out $2.89 this month. I'm just continuing to add to that position for the moment. SVOL brought in $20.47. We had QQQI brought in $19.32. That is up from the $17.19 last month. And again, a lot of these do fluctuate month to month. So this isn't one of those where I can take a look and say, all right, this is nice growth that's going on here. Most of these can be pretty volatile. So it's really more like looking at the dividend growth in the ETF one down here in the orange and the blue, than me paying attention to and making sure that those are growing properly. SPYI brought in $16.50. TLTW brought in $16.57. JEPQ brought in $13.51. HTGC brought in $37.54. AGGH brought in $9.21. JEPI brought in $9.46. Hess Midstream brought in $29.89. We saw Maine bringing in $7.41. In December, they should be paying out a special dividend as well on top of their regular monthly dividend. Realty Income brought in $6.11, and that is one that you can pay attention to when it comes to growth because they are the monthly dividend company, and they did just go up on their dividend recently in September, so seeing that one grow is still nice. And then Devo brought in $6.45. Now, for you guys who are new to the channel, this green section here are my high yield plays. So yes, they may be volatile. They may not have equity appreciation as much as some of other plays out there, but these are going to be bringing in a much higher yield. And these are going to be yielding anywhere from about 5% down here for Devo, all the way up to near 20% for XDTE. So these are much higher yielding, but again, the equity appreciation may not be there as strong as other plays, and the payout volatility is significantly higher than a lot of the other plays as well. And now in November, none of these ETFs that I have, SPYD, SCHD, GGRO, CGDV, or VU, pay out in the month of November. So as you can see, August didn't pay out, and I have 3 of them pay out in September, and then 2 of them paid out in October. So the ones that paid out in September, SPYD, SCHD, and DGRO, will all be paying out in December. And now looking at my dividend growth companies, I had AbbVie paying out $3.94 this month, and AbbVie took a big hit this month when it came to the stock price itself, so the yield has gone up. Now, this is a pharmaceutical play that for me, could be volatile. I don't know. I still have faith in the company going long term. And a lot of this stuff always comes down to what they have in their pipeline. And so I'm confident that they're going to have a strong enough pipeline to keep them going forward, especially with the drugs like Skyrizi. So I'm just holding on to them for right now. I'm going to continue to add to them as if everything is just normal and they're going to continue growing, but I will keep my eye on them. Starbucks paid me out $3.55, and they just crossed that $100 mark again when it came to the stock price. Procter & Gamble is at $2.74. They are also at a 52-week high right now. American Express paid out $2.11, and American Express has been an amazing stock for me. I am up significantly on American Express. Right now, the stock price is at almost $305 for American Express, and I bought in at $190. So whatever it was, something back then just told me to buy a little bit more of American Express than I did of everything else, and I'm very glad that I did because they're performing extremely well for me. And looking at my total return on this, I'm up 61% with dividends included, and dividends aren't all that much right now. So 61% on this one alone is amazing. This month I also got paid out 64 cents from MasterCard, 66 cents from Costco, and 61 cents from Apple. So these three here, again, these are more long-term dividend growth. And when you're looking at dividend growth plays, these are companies that are most likely going to be growing their dividends at double-digit numbers. There's a good chance that they're going to be having a lower yield, but you're also going to be seeing a significant equity appreciation growth as well. So they grow their free cash flow significantly, they grow their stock price significantly, and they're going to be growing their dividends significantly. So when you buy them up front, you're going to get smaller dividends, but in the long term, you're going to get significant growth for the dividend itself, and you're going to get equity appreciation also. So that is the bonus you're going to get. So this here, you're buying in for time purposes rather than an instant gratification income for a higher yield. And now other dividends that I got paid this month, I got CAT, and I did sell out of CAT. I do like it, but they were giving us a poor forecast for next year. And for me, I was looking to trim a couple of positions. CAT just happened to be on that chopping block, so I cut CAT out of that. HYBI, I tried really quick, but I wasn't feeling it. And I didn't feel like I wanted to add that one extra position. I kind of didn't have a place in my portfolio. So I recognized it quickly and cut it out quickly, but still caught a dividend of 76 cents. So at the end of the month, my total dividends were $447.33. That is up about $109 from the $338 I got paid last month. Now, a lot of that it can be contributed to me bringing on a lot of the ultra yield dividends as well back into my portfolio and increasing those positions. So I'm looking to utilize those for cash flow to be able to add to all these plays here in the orange and the blue, because those two here are my long-term growth plays, and I'm just using the cash from all of these blue plays here and all of these green plays here to be able to add to all of the rest and grow my portfolio quicker. For interest this month, I do have my SoFi account, and if you guys are interested, that link is in the description down below. I get $75. You guys get $25 for setting up a bank account through there. As far as I know, this is only in the US, so I apologize if you guys are international. But looking at this here, almost $52 I got from just interest, just from having money put into my savings account. This is money like my cash. So right now I have about $6,600 sitting in a vault in my savings for my cash for my stock portfolio, and that there by itself brought in $19 this month. It's like having your money in a treasury or a CD, but it's immediately liquid and you could take it out and use it at any time. But I'm still getting 4.2% on all of this. So yes, I might be able to get more interest when it comes to a CD or a treasury, but with this I have the flexibility of having it immediately liquid and I can use it at any time. And so by having that money in that vault, I still get that $19 in interest from just that, and that doesn't include my other vaults, which my other vaults have a total of about $18,000 total, and that does include this number here. But all of that together brings in about $51.60. And this month I ended up paying out the $51.78. So again, that's $50 a month just from having my cash sitting in my savings in that SoFi account. And again, if you guys are interested in something like that, please look at the description down below. We both get benefits from it, and it's pretty awesome. I've absolutely loved the platform so far. And so total between dividends and the interest, I brought in just under $500 this month, and that is down 48% over last year. But last year I had a significantly larger portion of my portfolio in the ultra yield ETFs, and I didn't like it being that much of my portfolio, so that's where I cut down on it, and now I'm growing it back up. But still, even being down 48% this month, I am still up 39% year over year so far, and that does not even include the month of December. So I could be looking to potentially bring in 50% year over year income when it comes to dividend and interest. Now, that doesn't even include the rent that I'm bringing in from my real estate. So again, everything that I have been spending my money on, I'm looking at a return on the investment. So with the house that I have now, I'm living in it. I have a tenant. She's awesome. And the rent right now is $1,500. So at the end of the day, when you're looking at all of my income coming in from my investments, I am up 106% year over year by almost hitting $2,000. And looking at it year over year on a total basis, up 145%. So again, I'm just looking to be growing these numbers here. I want to be growing my passive income from dividends and interest, and I want to be growing my income coming in from rent total overall. So these numbers here I'm going to be paying attention to because when it comes to the stock market itself and the stock price fluctuation, you could be seeing the stock prices going up and down and fluctuating all over the place, showing the portfolio value moving around all over the place. But what is the income coming in? Because that income is what I want to be growing constantly. Because if the market's going to be suppressed significantly, but my income is growing, that means I'm going to be buying income at a significant discount. Meanwhile, if the stock market is going to be extremely high and my income growth is going to be slower than the equity appreciation growth, then I'm going to be spending more money to bring in that income. So I just want to make sure I balance that, but it gives me that good idea of where the income is growing. But either way, I want to make sure that my income is growing because that income growing is what is going to be paying the bills. I'm not paying my bills based upon where the stock price is and what my portfolio value is. I'm paying my bills and I'm reinvesting money back into the market based upon that income that's coming in. That is what my biggest focus is going to be. And so again, it all comes down to me just paying attention to what the stock market is doing. Can I buy at discounts? I just follow my strategy as it is right now, and I'm at level 2, step 3. I have been growing that. I'm almost at that 10.75% cash position in my portfolio. And so once I pass that, I can continue adding to my portfolio as it is. And again, this is one of the things where I don't know if we're going to be getting a pullback. I don't want to be missing out on another 10-15% upside in this next year just because I think that the market's going to be pulling back. I think we're going to be getting a recession. I want to be ready to take advantage of that situation if we get there, hence the 10.75% cash position that I have, and I will continue growing that the further I get along in my portfolio, but I also don't want to miss out. So as I'm growing my portfolio cash position, I'm also going to be growing my portfolio positions itself to be able to continue growing from there, growing that income coming in, because that income, again, if we end up getting a pullback, most likely, historically, a lot of that income is not going to come down. So that income can increase and I can utilize that to buy at lower prices and I'll have more cash to be able to use at that point as well. So that's my strategy with all of that. And again, I'm happy with this month of November, making those positions. I'm working on that consolidation. I did sell out of VYMI and VYM as well because those two there, VYM was basically the same as having SCHD and DGRO. So I didn't need that one in there. It was too much overlap, too much diversification. So I sold out of that. VYMI I sold out of. It was an underperformer, and historically, international stocks don't perform as well as US stocks. And on top of it, a lot of US companies right now are international. So whereas you look back 30, 40 years, it was a different landscape that we were in before the internet. And a lot of companies internationally, you wanted that as a diversified play. Now, because of the way the companies operate, most of them, especially the big ones, are already international. So you are investing internationally by just investing in the S&P 500. So I've got VU that takes care of a lot of that. And on top of that, a lot of the other companies that I have in DGRO and SCHD are also international. So I decided that I can take that money and I can spread it out elsewhere. So that's what I'm doing. I'm just looking at further consolidation in the month of December. December should be one of my highest paying months of the year because the third month of the quarter is typically when I get a lot of those dividend growth plays that pay out their dividends. So I should be looking at one of the highest paying months. Of course, now it also comes down to how are my ultra yield plays going to come in? Are they going to be paying lower? Are they going to be paying higher? Because they are a significant portion of that income coming in and they're very volatile, it could be lower just because of those. But I'm really paying attention to all of those long-term ETFs that I have and the dividend growth stocks that I have. And I want to make sure that I'm growing that income there because realistically, looking long term, looking at the end game that I'm striving for, the end game is going to be just those two sets of positions and then the higher yield plays in those green sections that you saw on my spreadsheet. And so I want to make sure that those numbers are growing because if those numbers are growing, that is going to be a good sign for my long-term health of my portfolio. And the stuff in the purple is up there just for the ultra yield income coming in to feed those other plays. And in the long term, I won't have any of those anyway. So that's my strategy for my entire portfolio. That was my November payouts. Let me know what you guys made in your portfolios this month. Let me know what you guys grew your dividends to. Let me know what positions you like. Maybe there's some that you have that I don't. But otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.